Well, good morning, everybody. Welcome to the Locke Your Success Options Trading for Income Weekly Update for August, what is it, 4th, 2014. Just a reminder before we get going that the presentation is for educational purposes only. We're not broker-dealers or financial advisors, and we're not making any specific trade recommendations. Also, please note that we are using hypothetical computer-simulated trades within the presentation, and they are believed to be as accurately represented as possible. However, live results may vary from simulated results. And also, please be aware that the risk of loss in trading options can be substantial, so please be aware of all your risks prior to placing any trades. If you're watching this on some other venue, come on over to our website, LockeInYourSuccess.com. Take a look at our M3 Bearish Butterfly ROCK and M21 programs, as well as our group and one-on-one coaching programs. These web broadcasts, they are recorded and they are posted on my website at LockeInYourSuccess.com. Just go right into the blog and you'll be able to see them. And also make sure you join our mailing list. You can sign up for this free weekly webinar as well as get your free report, The 7 Secrets to Becoming a Successful Trader. All right, let's take a look at what's going on in the markets, and we'll move forward from there. So, last week I was saying, again, that there was conflicting patterns between the indices, which essentially means that there's confusion in the markets, and therefore, any directional movements are going to be pretty much news-driven, not terribly predictable from a technical standpoint. And that was going to be until whatever news happens to break some sort of a significant technical level. And at that point, usually everybody jumps on board and pushes the market in one direction or the other. I was slightly biased to the upside, and I was pretty clear, I think, that that was going to be if there was really no bad news that come out. And, we had some bad unemployment data on Thursday. We had some other things going on, a bunch of bad news coming out. And what happened on the Dow here was we broke this trend line, which has pretty much been in place since 2009. It's a very long-term trend line. If we look at our weekly, say, a 5-year chart, this trend line has been intact for quite some time, and we've been getting pretty strong bounces off it, although the bounces have been starting to get lighter and lighter every time it touches it, as we're going higher and higher. So the break of this trend line is somewhat significant, and I say somewhat because it is a very aggressive trend line, and at some point it was going to have to break it. But it is significant, kind of indicating that it's possible if this holds. In other words, if we come out this week and we break back above this trend line and start to push higher, and we'll consider that an invalid break, kind of like what we had. Let me just shoot back here. Back here in February, we had a break that lasted 2 or 3 days and came right back up over it. So, this being on a weekly chart, a single 2 or 3 days underneath this trend line isn't necessarily that big a deal. However, if we say we bounce and we react negatively off this trend line on the Dow, that's very likely that the Dow is probably going to push more into a sideways market like we've been experiencing in the Russell for quite some time. So this is an indication that things are changing. We kind of went sideways a little bit in the Russell, although Russell has held its primary trend line. This same trend line on the Dow that we're talking about on the Russell, we actually bounced on Friday, which is an indication that that may hold. So we are still holding our uptrend line in the Russell, but the Dow's been really the first index to actually break that trend line. So to me, that's significant, especially if maybe the Russell or the SPX follows. So, that said, the move down on Thursday pulled everything with it. We had a short-term support break in the Russell. We also had a short-term support break in the SPX, and we had a short-term support break in the NASDAQ as well. None of these is significant from a bullish standpoint. So, this is just a normal retracement. I mean, the NASDAQ just barely touched this 20-day moving average. That's nothing. And that's the most bullish of the indices right now. The Dow did break its 50 moving average. However, we're still over our 200. It's normal to have a 200-day moving average touch, so this is still a bullish chart as far as I'm concerned. Oh, we got the SPX. So take a look at that. The SPX, as far as I'm concerned, still a very, very bullish chart. This is that, well, let me see what, actually I'm not sure what trend line that is. Let me go back to 10 years. That's not even, this trend line here is something that's been in place, this yellow one, since 2011. Our trend line that's more significant here is this red trend line, which has been in place since 2009. That is still, we're still quite a ways off of that. We're way down here at 1850 on that trend line. So this down move is nothing significant on anything. And so I'm still bullish for the markets, shorter term and longer term, keeping with the possibility, however, that it's very possible the Russell may come down and touch this 1075 area, which has been a more primary support, especially if the SPX comes down and tests its horizontal support, which is going to be at about, we have some horizontal support at 1900. So I wouldn't be surprised if the indices try to push down to 1900, but overall I'm still bullish. I still think the market's going up, even though we may have some kind of a short-term down move of maybe another 25, 30 points in the Russell and the SPX. So that's where I stand with the indices. Again, short-term direction right now is hard to call. Makes sense that we're going to get a bounce today, at least this morning. We have it in the futures, right, because we did hit this trend line. We have some horizontal support in the SPX here. This is a good place to bounce. I'm always looking to say, you know, where are the long buyers interested in entering the market? This is one place I'd be interested. However, I'd be very, very interested in, if I was a long player, to enter the market at 1900. So we should get a bounce off of here. Depending on, I think it's going to be a dead cat bounce. We're probably going to push back down to 1900. And then I think the buyers are going to be very, very interested in getting involved in this market at that point. So I would expect at least a short-term strong bounce off of 1900 if we are to get there. All right, so that said, that is all I have on the indices. We're still a little vague, very short-term on where the market's going. Longer term, we still have a good handle on where it's going. So we'll go forward from there. Let me see if I have anything on the market. No, I don't have any questions on the market. So let's move on to the trades. I have the August Bearish Butterfly was already closed. On the website trade, we closed it at 10% profit. However, I'd like to congratulate the students who took advantage of, you know, we did on the website, we did a straight guidelines trade, but if you remember coming into that trade, I was talking that it would be smart to ignore your delta theta guidelines and, you know, just kind of let the trade go to the upside and wait for it to come back down. The guys who did that had a very, very good month last month, so congratulations on doing that and following that. A little bit of a tip there, and I had several emails from people who got between 30 and 50% of planned capital, a couple people a little bit more. Really nice trade this month for that trade, so congratulations on that. For the website trade, we only pulled out about 10% though because we followed the delta theta guidelines, and we're able to get out at our 21-day to expiration reduced profit target. The August M3, if we come back to here, was closed. If you remember last week I was talking about I was just looking for a 10% profit and to get out of this thing as soon as possible. Therefore, on Monday, which was the 28th, around 1 o'clock, we had our numbers. We just kind of pulled out of this trade. Let me see why this is not okay, because that's the end of the day. So this is what we looked like on Monday morning on the open. We're up a little over $4 grand. It posted an option view at 10 o'clock. This is what the position looked like here. A little bit later in the afternoon, the prices came in where we're well over 5,000. We pulled the trade. So that was another good trade for the August expiration. Nice. Let's see what the actual number came in at. Actually, I did write it down somewhere, I think. No, I didn't. Let me take a look at our reports. Number came in at 51.35, slightly over 10%, about 10.3. So really, really good month for the August M3. Nice trade there. So those two trades are closed for the month. The August ROCK trade is, and we're here on the first. We're at up 280 at 10 o'clock in the morning. Positions up about $1,900. Looks like this. Towards the end of the day, 3 o'clock, we'll come into 230, 1430. Obviously, we had a big down move. It kicked our delta to positive 158. We have a maximum delta in M3 configuration of about positive 100. Therefore, we did a complete rollback of this. We just took everything back 20 points. So you can see that we're currently at short strikes here of 1110, long strikes of 1060. We're going to take this whole wing, bring it back, and then we're going to bring back the upper wing. And at the end of the day, we're at 1090 with our primary or with our lower wing shorts. I put the shorts on the upper wing at 1110 and 1120. I also rolled back our long call, so it's synthetically the same as rolling the butterfly back 20 points and just repositioning our shorts here. And I also took the call that was, I believe, at, let's see, our 1100, and we took it down to 1050. So at the end of the day, we're essentially looking at a delta of positive 22. We're rolled back to 1090, and we have a position that looks like this. Nice, flat T+0 line for the bounce, should we have one. And if we continue back, then of course we'll make our adjustments as needed. But this looks like a really, really nice setup for this month. Even if we come back and test the 1080, 1075 area, we'll end up rolling back again, but this should be a good trade. So looking nice, and of course if we take off to the upside, we should have no issues here. So that's the ROCK trade for August. And the last thing we have going on in August is the V-Condor, which isn't really faring as well as the other trades. The V-Condors, they just don't like this kind of volatility back and forth. You know, if you were in the SPX or the NDX with this, it probably isn't too bad, but the Russell's been a little volatile for the V-Condor lately. I ended up buying some of these shorts back. So I bought some back on the 31st. I bought another 1090 short back. On the 8-1, I bought another 1090 short back. And at this point, it's down about $1,200. Which certainly isn't the end of the world. I mean, it's not a killer for the trade, but it does pretty much take out the possibility of making anything significant here. We're kind of set up for what we call a small gain for the August V-Condor, most likely. I mean, it's possible we still lose it, but it's kind of unlikely. So this should be okay, but it's not going to be a banner month for the V-Condor this month in the Russell. That is all I have for the August trades. If we take a look into September, the V-Condor for September is doing absolutely fine. If you remember, that was put on at slightly different strikes. I actually put this on a little bit lower than, this was put on a little bit lower than normal for the strikes, mainly because I didn't want to be in the same strikes as the August because we don't want things losing at the same time. So this is sitting right here in the middle. There were no adjustments. There is no issues whatsoever with this trade. And all is going well. If we look here, we're short at the 1020, and we're short at the 1240. So that looks nice. And the last thing we have going on here, oh no, we have two things going on. We have the September M3. This was entered last week, and it did require a rollback. So let's look at the September M3. As of Monday afternoon, we are sitting in these 1120 butterflies. We have a call at 1070. Here's what the position looks like. Nice flat T+0 line. Everything looks great. So moving forward, let's see. If we go to Thursday afternoon, we still don't really have any issues in this trade, right? The market is down. Let's see where it went down to. It's down to 1122. Our delta is positive 26. The trade's up $847. So this is what the position looks like here. So our delta guidelines to adjust this to the downside is about positive 100, which doesn't come from until way, way back, probably in the 1085 level somewhere. However, I also have another adjustment guideline on this that basically states if we get below our short strikes towards the end of the day, then I'm going to roll this back anyway, even though our delta is fine. So on Friday, that's what I did. So if we come to Friday, the continued down move put us under our 1120 shorts because we were all the way down to 1112. We didn't have a delta problem, but since we were under the shorts here, I did do a rollback. I just rolled this back 20 points to 1100, and this is what the position currently looks like now. So fine looking M3, this move didn't really give it any trouble at all. Realistically, did I have to do that rollback? Not really. I mean, if I wanted to, I was expecting a bounce today. If I wanted to play that, the trade was certainly, it wasn't any trouble. A continued down move even before the adjustment really was not an issue. So I certainly could have held that at 1120. But just following the guidelines here, we did the rollback, and this is what we look like now. And of course, the last trade we have on would be a September Bearish Butterfly, which had no adjustments. It is up about $2,500. We're 10 points under our short strikes, delta of minus 32. Really healthy looking at this point. If we do get a very, very strong bounce, of course, that could give us trouble in the future, in the coming weeks. But I'm not really expecting that. I'm expecting some sort of a mild bounce today, maybe a push down to 1080, and then getting the more significant bounce. This should be a good trade for this month. So we'll see how it turns out, but so far so good. So that is all I have for the positions, and I have a few questions already, and then I'll take any other questions if you guys want to just type them in. We can go ahead and do that. So the first question is, is the ROCK trade suitable for someone who's working during the day? And the question is, the answer is yes, it can be. You can trade this. I would make sure that you have an opportunity probably every day to look at the market and make some sort of maybe towards the end of the day, but it could really be in the beginning of the day. Because I have people who trade this who sleep during the day, sleep during the trading day because they're overseas. And you can do it, but you're going to do stuff a little bit differently. So with the ROCK trade, you do have a lot of gamma risk sometimes. Like right now, the ROCK trade is in an M3 configuration, and essentially, you can trade it just like an M3. You don't really, and as a matter of fact, I would usually recommend not paying attention to it during most of the day because we don't want to make our adjustments based on extreme ranges during intraday trading. We want to make our adjustments based on just one time a day, usually towards the end of the day. And make that adjustment. However, as you get closer to expiration, you get fully scaled into the ROCK trade, you start taking on a lot of gamma risk. And a lot of times you do want to make some intraday adjustments, particularly if you get near expiration. And that goes for the same for the Bearish Butterfly, right? If you're into a triple Bearish Butterfly coming into expiration, it gets more management intensive. You can manage this with contingent orders using calls and puts. So I would not put a contingent order using a Butterfly. That doesn't work out well. You can't get properly executed on a Butterfly, or at least, you don't know if you're going to get executed or not. The mid prices on the Butterflies are all over the place. So that means if you put a contingent order in to hit it at mid price, or maybe even mid price plus a few, 50 cents or something on a Butterfly, you don't know if that mid price is way overpriced at that point and you paid way too much for the trade, or you don't know if it's way underpriced and there's no way it's going to get filled because you're not watching the market, you're not checking your synthetics and doing the other things that we recommend doing. So you really don't know if that order is going to fill. It's not a very effective way to control the position. You can, however, put in just straight call orders and put orders to control your delta while you're working or while you're sleeping, and then at the time of day you're going to come in and make your normal adjustments. You sell the put off or sell the call off, make your normal adjustments, and you're back in the game. So all you're doing is you're doing these slight delta controls as with calls and puts until you can get to the market and make your regular adjustments. So yes, so you can trade it during the day. That's how you would do it. And if you need help with that, specifically is not in the program. We can cover that stuff in one-on-ones, which is what I usually do because there's a lot of other things to consider, but certainly can be done. All right, so the next one is, what are the advantages or disadvantages from a 70-point wide Bearish Butterfly instead of a 50 wide? Let's see, I did some back tests as the Russell was around 700. Now it's higher. Yes, it's much higher than 700. Is it suitable, useful to adjust the width of the fly? I have some traders who do trade wider butterflies. Let's talk about a couple of things. First of all, the 50-point wide wings work perfectly fine in this environment with the price up this high. Your wing width is more of a function is it worth it to actually go wider? So if you're looking at, let me just look at this butterfly here. If I'm looking at this butterfly, at some point it no longer makes any sense to go any wider because the benefit you get from going wider doesn't always make a whole lot of difference. Like if I go a 70-point wing here, right, and I analyze the trade, and I come back and analyze the existing position, and we superimpose them, I need to determine if my 70-point wide butterfly is really going to give me an advantage with price movement on, and if that advantage is going to be worth the risk. Sure, I have wider break-evens, but my T+0 line is actually worse. Right, so I need to come in here and decide if that's actually worth the value. In other words, if going wider in the wings is actually worth it from not only a capital level, because if I do a bearish butterfly with 70-point wings, I'm not talking about a $50,000 trade with a 10 lot anymore. I'm talking more like an $80,000 trade. And is that trade actually going to give me any more money, and is it going to win more often? What we find is a lot of times the answer is no. What's going to make more of a what's going to make more of a difference is than having a 70-point wing is scaling in maybe every 30 points rather than every 20 points, or every 40 points rather than any 20 points. So if I decide that the market movement is too much to handle for scaling in every 20 points, and I want to scale in every 30 points, at some point having 50-point wings is going to be too narrow. Because if I scale in every 20 points, I'm going to have an 1120, an 1140, an 1160. I'm still actually going to be inside my long strikes with my short strikes, if that makes any sense. So all the short strikes of my butterflies are going to be within all the long strikes of my butterflies. And that tends to work out pretty well. If I start to scale this 30 points, then I have short strikes outside my long strikes. The position becomes very inefficient. At that point, I'd probably want to go with 70-point wings because then I could have a much more efficient position when I'm fully scaled in. So it has less to do with the price of the index and more to do with how much you want to scale, what you want, the distance you want between your scale points. Right now, the 50 points are working pretty well. The SPX of 50 points are kind of like, it wouldn't be a bad idea to go to 75. And if you were to do that, you wouldn't scale in every 20 points. You'd be scaling in more like every 30 points, every 40 points. So I do have traders that do that. It does work. I wouldn't do it with a 20-point scale, and I would stay with a 50-point wing butterfly. Plus, when you have problems with when you're really having problems with the bearish butterflies, when the volatility is extremely low, and when the volatility is extremely low, going wider with your wings is usually a bad idea because you're not getting any benefit for going wider because there's no difference in time value really between your 50-point wides and your 70-point wides and your longs, and that makes it you're just taking on directional risk for no reason. So for those reasons, I would tend to stay with a 50-point, but you can trade wider. Okay, now we have, if I would buy your ROCK course, would I get a $25 discount for group coaching? As far as discounts and pricing on all the programs, all of that is handled on the SMB side. I really have nothing to do with it. So contact Seth. He's actually on vacation this week. He'll be back on Monday, and you can talk to him about discounts. But yes, but I can say yes, I can talk Seth into. What he's saying here is with our group coaching, if you buy one of our programs, you get a $25 discount. The idea is that if you buy any one of the programs, you get a $25 discount. Make sure, though, if you do the ROCK course, prerequisites are knowing how to trade a bearish butterfly and knowing how to trade an M3. So make sure if you don't have the courses that at least you are very familiar with that information, so the course makes sense to you. All right, so that's good with that. And again, contact Seth for the discount, but I always say yes. If you buy the ROCK course, if you have any one of my courses, I will make sure you get a $25 discount. If you don't get it automatically, contact me. If Seth gives you a hard time, contact me. I'm sure he won't. I'm sure it won't be an issue. But if there's a question on it, contact me. I'll get you that discount. Full T-log on the August ROCK trade. Yes. Let's go to the August ROCK trade. 14 August ROCK trade. Where are you? Here you are. I have to wipe out some of these accounts so that I can find them. All right, so the August ROCK trade was essentially entered on the 17th. The 22nd, I did 10 verticals to adjust to the upside. In other words, making the trade more bullish, 1120, 1130s. On last Friday, we did this rollback. I did the rollback in the form of a condor. In other words, I rolled back the downside leg. I moved a call from 1100 to 1150, and then I did two different orders, which I just put them in the T-log, but what this was two different orders of a condor. We had an 1160, 1140, 1120, 1110 condor order, which rolled back a two-lot, which rolled back some of this. And then I wanted the 8 shorts in a different place, so I did a 1160, 1140, 1180, and 1130. I'm sorry, 1110 and 1130 condor roll to bring this to the position it's in. So that's the way it was reached. If I made no adjustments on September 3, would I still make the adjustment 1100 today? It depends on when the market closes. If the market closes over 1120, I'd probably leave it alone. And if it closed around 1120 or lower, then I would roll it back. About how many disciples do I think you have following your systems or methods, or how many people? I don't really know. I know we have several hundred. I would say a minimum is in the 500 range. That I've made contact with personally. That's probably a lot more that I don't know about. So that's probably that. Okay. Could I show the T-log for the September M9? Yeah, sure. That was only an entry, so there was really no issue there. Oh, an M9, by the way, is a bearish butterfly. That's another name for it. And also we had an entry on the 25th, which was the day we're scheduled with we're scheduled to enter it. So that is that's the T-log for the M9 for September. And let's see, I believe that's all we have for questions. So I'd like to thank everybody for joining me, and good luck with the trades. We're still not sure exactly short term where the market's going, but longer term we're still very bullish. So everybody have a great day, and we'll talk to you next week.